Alright, so cool. In this video, what I'm going to do, I've recently posted a video in regards to how to master market predictions and how to determine where the market's going by following institutional order flow. That's basically following higher highs and lower lows on the daily chart to end up figuring out where the market's going, the direction it's going. I also showed you about fair value gaps and how to know where the market's going to pull back to. But in this video, what I want to do is show you guys also how to look for entries and the most optimal way to look for entries when swing trading. This only applies to swing trading. The reason it applies to swing trading is because swing trading is stress free. If you're day trading, you have to look for perfect entries, and the issue with that is the market usually tends to fluctuate and tries to get as many people out of the market as possible. This is because retail traders usually attempt to day trade, which is pretty stupid. You're trading against computer algorithms, like you're trading against the best of the best bots that have been coded by the best of the best quant traders in the whole world. These people, they pretty much look for they pretty much have built systems that are, they compete with the best of the best systems. All these different banks and institutions, they all build their quant bots, and these bots are amazing to trade. So why do you think that you will be able to beat them? That's why I say swing trade. Once you know how to swing trade, you know where to position, and you have a wide enough stop loss, trading becomes pretty simple and straightforward. So look, what I showed you guys previously is once you've understood how institutional order flow works, when you have a break below structure, you have obviously a downtrending market followed by a break above this level here. We have a slight pullback into a fair value gap here, and then price continues higher. Now we know the market's in an uptrend. Institutional order flow is pointing higher, and optimal areas of entry will always be fair value gaps. But what I want to show you is, as a swing trader, you don't always need to look for entries within a fair value gap. You can actually look for entries at other places on the chart that are also very important. These include the hourly chart fair value gap, which occurs usually during London session or New York session, or you can look for entries at order blocks, which are levels like this. So these are the optimal areas for entry once you've been positioned. And the way I look for entries and the way I trade is I use a wide enough stop loss that is a quite straight stop loss. I mean, when I say it's a straight stop loss, what I mean is once I look for my entry and I position, I have a 250 pip stop loss. So you can see how wide this stop is. What this means is I don't need to check the market once I've positioned. I could just let my trades run. And obviously this week, the only trade I'm in at the moment is the Hong Kong 50 trade. I tend to leave one trade on at a time. Sometimes if I have multiple good trades open, what I'll do is I'll move my stop to break even, take my risk off the table, and then I'll let the rest of the trade run and start looking for trades on different markets, on other markets. But I tend to try to eliminate my risk before I do that, just on a psychological level. But the best thing to do when trying to position while you're swing trading is look for a position in the market that is on a daily chart, in a daily chart fair value gap. And if that has already occurred, then you're looking for an hourly chart fair value gap, and just use your daily chart. Just use a wide enough stop loss. I use a straight standard 250 pip stop loss. I don't try and be any smarter. I allow the market to just do the running for me, and I'm just expecting this market to continue to go higher and higher. I'm considering trying to look for an entry in this market again today, as we had FOMC yesterday. And if I was going to look for an entry today, it would most likely be within this fair value gap here. So we'll see how that goes during the New York session. What I'll do is once it hits 1 p.m. London time, which is equivalent to 8 a.m. New York time, I'll put my order in, a buy limit order in this area with my 250 pip stop loss. And then I'll enter my position and I'll let the position run. So this is the most optimal way to look for entries into this market. You either use a hourly chart fair value gap or a daily chart fair value gap. Regardless, you use a standard 250 pip stop loss. That's it for the video. Hopefully I've covered everything that I needed to. If you have any questions, leave a question mark leave the question in the comment section. Hit the subscribe button to get more value from this channel, and check out the other videos on the channel if you need a little bit more detail about mastering market predictions, understanding the value of swing trading over day trading, and trying to build consistency. Alright, let's take note.